a tough year to call. You told us that around mid-year, I think it was August. You made a call mid-year about semiconductors. Semiconductors have continued to do well. You were iffy on the iPhone launch, the iPhone 11. That's done pretty well. What's going on here? What did you get wrong, and what do you see happening as we head into 2020?
Yeah, I mean, I think everybody's been surprised at how strong the U.S. economy has held up, given all the things going on in trade. Obviously, getting to a phase one trade deal, that's been great. The other thing, quite honestly, I didn't really count on was the Fed starting to go through QE again. I mean, they're saying it's not QE, but at the point you're buying $60 billion a month, I think most people would say that is QE. And you've had the Fed obviously being very dovish going forward. So all of those things lining up, obviously getting through the Brexit, the vote this last weekend where Boris Johnson won a landslide victory, that takes disorderly Brexit off the table as well. And so when you look at all that, the market just kind of keeps melting up, is the way that I look at it. And that's why I put out that tweet on Monday morning under my handle at Daniel T. Niles saying, you know, when the market's up 20%, over 20% going the last 2 weeks of the year, it gains another 2.1% on average to finish the year. And this year, you know, with a lot of these risks behind us, it probably continues that way. And that's why people talk about a Santa Claus rally or a January effect.
All right, so we were just looking at some of your favorite picks heading into 2020 on trends like 5G, chips, et cetera, et cetera. One thing I didn't see up there was cloud. And so, you know, I look at names like Salesforce, Adobe, SAP with its Qualtrics buy, VMware. Are those, you think, less significant than the 5G plays? Because some are saying that 5G will really start to have an impact in 2021, not 2020.
Yeah, I mean, we actually do like the cloud, but we're looking at it more from the hardware side. So, you know, if you look at the cloud, you had probably about 6 to 9 months of digestion going on there. But what you've seen is you've started to see the demand on the hardware side really start to pick up again. So, you know, public cloud is still only 15% of the workloads today, but that's like growing at about 30% per year. So that's going to obviously go up quite a bit. If you look at AMD, for example, we own that one. Their data center processor sales were up 50% sequentially. We like NVIDIA as well, where the numbers have been coming down for about a year. Those started to go up again. Their data center revenues were up 11% sequentially in their most recent quarter. So we actually do like the cloud. We've sort of gone through the 6 to 9 months digestion phase, and now that should start to turn back on as you look into next year.
Dan, U.S.-China trade deal or not, there has been arguably this shift happening, this decoupling happening between the U.S. and China in terms of tech, whether it's chips or some of the other key technologies to watch right now. It's been happening for the last couple of years as China has been investing to start to lower its reliance on U.S. technology. A number of executives I've spoken to, both on camera and off, have voiced concerns that what this trade war has done is basically accelerated China's move to cut away from dependence on U.S. chips and other tech companies. How do you see it, and what does that mean in terms of investments in 2020 and beyond in the sector?
Yeah, Morgan, I think you've brought up probably the most important point from a fundamental basis when you look at 2020. You're absolutely correct. China now views getting into areas like semiconductors, technology, as something of a national security issue. It's not just even a financial opportunity. And so unfortunately, I think what you're going to see happen, or not necessarily unfortunately, but what you're going to see happen is there's going to end up being sort of almost two ecosystems starting to develop where the Chinese do not want to have reliance on U.S. technology products. So, for example, if you look at Huawei's new 5G phone that just came out, when that was torn down, there were no U.S. chips in it at all, and that's their 5G phone. You're going to start to see memory production starting to ramp up early this next year where they're going to go from 0% of the worldwide market in DRAMs, for example, which are chips that go into everything. That's going to get to 5%. That's going to keep climbing. And so I think when you get to the back half of next year in particular, it's going to get very interesting because a lot of the new phones that come out, typically U.S. wireless companies, for example, they gain content every year. Every year it goes up. I think what will get interesting is the end of next year, when you go into the holiday season, you may see a lot of Chinese phones that don't have U.S. chips in them. That could cause a very big problem because right now the market doesn't care, right? Stocks are going up, so they're going up more, which means they go up even more. And Apple sounds great, and AirPods are sold out till January 13th, I think I saw when I looked online. So, the market just follows the path of least resistance, which is higher. But eventually you will go back to focusing on fundamentals, and the point you brought up, I think, is one of the most important.